In 2025, where should you put your money? Crypto, stocks, or real estate? Each offers unique opportunities and risks, but only one, or maybe a smart combination, can maximize your wealth this year. The investment landscape is changing rapidly with new technologies, economic shifts, and evolving markets. In this video, I'll break down the pros and cons of each, analyze current trends, and help you decide where to invest for the best returns and security. Whether you're a beginner or seasoned investor, this guide will help you make smarter, future-proof decisions. Let's dive in. Understanding crypto high risk, high reward cryptocurrency remains one of the most exciting yet volatile investment options in 2025. With blockchain technology advancing and increasing adoption from institutions and governments, crypto offers huge growth potential. Coins like Bitcoin and Ethereum have proven resilience, while emerging altcoins and decentralized finance projects create new opportunities daily. However, crypto's price swings can be extreme, regulatory uncertainty looms globally, and security risks like hacks still exist. Crypto is ideal for investors with high risk tolerance looking for exponential gains, but who can withstand sharp downturns. Education and caution are crucial. Only invest what you can afford to lose and diversify within the crypto space. Stocks. The backbone of long-term wealth, stocks have been the cornerstone of wealth building for decades, and 2025 is no different. The stock market offers liquidity, transparency, and a broad range of options from growth stocks to dividend-paying blue chips. Advances in technology sectors, renewable energy, and emerging markets present fresh growth avenues. ETFs and index funds provide low-cost diversification, reducing risk while capturing overall market gains. Stocks tend to be less volatile than crypto, but more than real estate. They offer compounding returns through capital appreciation and dividends. For most investors, especially those with medium risk tolerance and a long-term horizon, stocks remain a core investment choice. Real estate, tangible asset with steady cash flow, real estate investment appeals due to its physical nature and potential for passive income through rents. In 2025, real estate markets vary globally. Some cities face price corrections, while others grow rapidly due to urbanization and demand. Real estate provides diversification beyond paper assets, inflation protection, and tax advantages in many countries. However, it requires significant capital and management effort, and liquidity is lower compared to stocks and crypto. Real estate suits investors seeking long-term wealth stability, income generation, and those willing to actively manage or outsource property operations. New trends like real estate crowdfunding and tokenization are lowering entry barriers, making real estate more accessible. Liquidity and accessibility considerations. Liquidity, how quickly you can convert an asset to cash, is critical. Stocks are the most liquid, tradable instantly during market hours. Crypto also offers high liquidity with 24/7 markets, but sometimes faces liquidity issues in smaller coins. Real estate is the least liquid. Selling property can take months and involves costs. Accessibility varies too. Stocks and crypto can be bought with small amounts online, whereas real estate traditionally demands substantial capital, though crowdfunding platforms are changing this. Your investment choice should align with your need for liquidity and how actively you want to manage your investments. Tax implications and regulatory environment. In 2025, taxes and regulations increasingly shape investment returns. Crypto faces evolving tax rules worldwide. Capital gains, reporting requirements, and potential crackdowns affect profitability. Stocks generally benefit from well-established tax laws, with advantages like tax-advantaged accounts in some countries. Real estate offers depreciation deductions, mortgage interest benefits, and potential tax deferrals, but also complex regulations. Staying informed about tax laws and consulting professionals is essential in 2025. Regulatory clarity in crypto might improve, but varies by country, influencing investment strategies. Tax efficiency can significantly boost net returns and should be part of your decision-making. Market trends and economic factors impacting 2025 investments. Global economic conditions, interest rates, inflation, geopolitical events impact investment performance. Higher interest rates may pressure real estate and stocks, but can make crypto less attractive as a speculative asset. Inflation can boost real estate values and stocks of commodity-linked companies. Technology advancements drive growth stocks and crypto innovation. Urbanization and demographic shifts influence real estate demand. Understanding these macro factors helps anticipate market cycles and adjust your portfolio. Staying adaptable and informed enables you to capitalize on trends while managing risks. Combining investments for diversification and balance. No investment is perfect alone. The best approach for 2025 is a diversified portfolio combining crypto, stocks, and real estate to balance risk and reward. Diversification smooths returns, protects against downturns in any single asset class, and offers multiple growth channels. Younger investors may overweight crypto and growth stocks, gradually shifting to more real estate and stable stocks with age. Rebalancing periodically keeps your portfolio aligned with goals. Using ETFs, REITs, and crypto index funds makes diversification easier. Building a balanced investment empire tailored to your risk tolerance and timeline is the smartest way to grow and protect wealth in 2025. The role of technology and innovation in shaping investments. Technology continues to disrupt all three investment classes: crypto, stocks, and real estate, transforming how we invest and what opportunities exist. Blockchain innovations are expanding crypto beyond currency into areas like NFTs, decentralized finance, DeFi, and tokenized assets, offering new ways to invest and earn passive income. In stocks, artificial intelligence and big data are helping investors identify trends and automate trading, increasing market efficiency. Real estate is evolving with technology too. PropTech platforms simplify property management, virtual tours improve sales, and fractional ownership allows small investors access to high-value properties. Staying abreast of these technological advances in each sector can give you an edge in spotting lucrative opportunities before they become mainstream, making technology savvy a critical factor in your 2025 investment strategy. Impact of global economic and political stability. Global economic and political stability heavily influence the performance and safety of your investments. Geopolitical tensions, trade wars, and changing policies can cause volatility in all markets. Crypto markets are highly sensitive to regulatory changes. A crackdown can lead to steep declines, while favorable legislation can spark growth. Stocks are affected by economic cycles, interest rate policies, and corporate earnings impacted by political decisions. Real estate markets can also fluctuate with government housing policies, taxation, and economic health. In 2025, investors must monitor global news closely and diversify internationally when possible to hedge against country-specific risks. Understanding the macroeconomic environment helps you protect your investments and capitalize on emerging markets or safe havens during turbulent times. Psychological factors and investor behavior. In 2025, finally, your mindset and behavior as an investor profoundly impact your success. Emotional decisions driven by fear or greed can lead to buying high and selling low, damaging long-term returns. Crypto's volatility especially tests investor psychology, causing panic sells or impulsive buys. Stocks and real estate also face cycles of hype and pessimism. In 2025, practicing disciplined investing, sticking to your strategy, avoiding market noise, and maintaining patience is crucial. Using tools like automated investments, diversification, and professional advice can mitigate emotional bias. Educating yourself on behavioral finance helps recognize and overcome common pitfalls. The best investment might fail if you can't manage your emotions. Developing a calm, rational mindset makes you a better investor regardless of asset class. There you have it, the pros, cons, and key considerations for investing in crypto, stocks, and real estate in 2025. What mix suits your goals?
Share your thoughts below.
Don't forget to subscribe and hit the bell for more insights on smart investing and wealth building. Next up, watch Turn Your Phone into a Money-Making Machine to sharpen your financial skills.
See you in the next video.